After starting a small account and turning it into a large one, starting to make thousands of dollars per trade, this is how I would start over with a small account. The strategy I use only takes 60 to 90 minutes in the morning, allowing me or you to go about the rest of your day, not sitting at the charts for hours and hours. Just this morning, multiple students of mine made hundreds to thousands of dollars in the 60 to 90 minutes that they were trading. So let's start from the beginning on how you can get set up and start your own trading journey. Now, I have a 90-day beginning trader roadmap that will jumpstart you through this journey even more and is a great supplement for this video. You can download it for free in the description of this video or using this QR code. Now, first off, let's start with what you should trade. There are so many options out there. It's really confusing when you first start out. There's stocks, there's options, there's Forex, there's futures, there's crypto, and they all have their own different complexities. Stocks often require you to have a lot of capital to actually trade and day trade. Options can just be overly complicated, even though they give you really good leverage for a small account. Forex can give you pretty good leverage too, but it can be a pretty shady place in terms of brokerages and stuff out there, and their fees can get really high with a small account. And then the other option too is crypto. Kind of same thing, is you can get good leverage, but it's also can be kind of a shady place. And the thing I've really landed on with trading is futures. I find that it's extremely simple. It doesn't have high potential spread commissions like Forex does. It doesn't have the complexities that options has. And it's an extremely regulated market to where pretty much all the futures brokerages out there that you will park your money in are really, really safe. I always suggest to still go with the bigger ones because, bigger brokerages are always gonna be way safer to park your money. And then just flat out when it comes down to it, I think they are the best at giving high leverage, being just as simple as trading stocks. Literally, if you just buy it where it is and it goes up, you make money. And then on the short side as well, if you bet something that's gonna go down, you get in and then you get out and you just make money. Versus, some of them with options especially have a lot of complexities in it that just as a beginning trader is just not worth the headache. What you wanna do is make trading as simple as possible because it's going to make all the complexities smaller and less variables for you to deal with. That'll make it more likely for you to become consistently profitable quicker. So I don't want to dive in too much about how futures work, but I will link a video up here that will give you way more detail about the intricacies about how futures work and how you can trade them. If you have no idea what you want to trade, I highly suggest checking futures out, and that is going to be the best way for you to grow a small account. Now, the next thing is, how are you gonna start a small account? You have really three options to go through. You have a self-funded account, which with futures, you can probably start with as low as $500 up to $1,000. I would say that's a good sweet spot for how small you can start, or you could go the funded trader route. And then of course, there is the demo trading route as well. So for a funded trading account, there are these websites, and I'll link one down below that I suggest called Apex Futures. But they will essentially let you pay a monthly fee, and you will go through an evaluation process of essentially trading, proving that you can become consistently profitable, over generally 7 days, I think Apex has. But essentially you just have to prove that you are consistently profitable at trading. And then from there, they will give you a fully funded account. And this kind of depends on what you sign up for. It can be as low as $25,000 and some can be up to a couple of $100,000 of dollars. And so if you want to try and make money quickly, that's probably the best way. Now, the only caution I have about going the prop firm trading route is they can be pretty hefty in fees if you are not able to pass that funded account challenge and then, consistently make money doing it. Because there are monthly fees to do it, there's reset fees, there's a bunch of fees that'll pile on if you're making mistakes and not becoming profitable doing it. And so what I highly suggest in the first 30 to 90 days, follow that blueprint I linked down below and demo trade. I put a couple of options in that PDF of where I suggest to demo trade and what accounts to set up. And what that'll do is it allows you to just figure out what trading is like. Get comfortable reading charts, get comfortable actually trading and what that feels like, because you're gonna make a lot of really silly mistakes in the beginning just because everyone does. And you don't wanna be costing yourself money making those silly mistakes. And so go with the demo trading route initially. A lot of the time you have to pay a data fee, that can be $10 to $20 a month. Pretty much anywhere you have to do that, and just start out slowly. Trading's all about the long game. If you get a really good return, on your investment portfolio, they say of, 6 to 7%, 10% of return a year, you're doing really well. Well, trading is very, very similar. You want to be focused on the process and the percent return. So like, for example, if I make 20% return on my trading account, that is really good if I could consistently do that every year. And if you're, trading $1 million trading account, well, that's $200,000 a year. That is a sick full-time income. But when you first start out, especially if you go the funded route, you're starting out with $1,000, 20% return is only gonna be $200. It's not really gonna seem like it was worth it for you, right? You spent tons of hours every day and all you made was $200. But again, you have to remember, trading is infinitely scalable to some extent. And so if you can be profitable on a small account, you can be profitable on a big account. And so start demo trading, and then if you really want to push that funded account route, then switch to it down the road. And one of the biggest mistakes a lot of traders make in the beginning is thinking win rate is everything. That, you'll see even YouTube videos out there that say, oh, I have a 90% win rate. And, you'll think that's really good because, well, that sounds really good, right? But when it comes down to it, it's about something called your slugging percentage. And essentially what that is it's your win rate times your risk reward ratio, and it's essentially combining those two things. And so what I've realized over time is having a better risk reward ratio and actually a lower win rate is easier to be consistently profitable trading. And so what I mean by that is if you risk $100 to make $100, that is a 1-to-1 risk reward ratio. Ideally, it's better to risk $100 to make $200 or $300. That's having a really positive risk reward ratio to where your wins can make you a lot of money, and when you lose, you don't lose that much money. Trading can be really stressful, and having it to where you have let's say if you lose $300 to only make $100, it can really wipe out a lot of your gains easily, and losses become even more stressful. And I've done that, and it's just not the way to go. It's way better to feel like, okay, I don't have to win very often to still be successful at this. It allows you to switch yourself into that trader's mindset, that probability mindset, and that kind of casino mindset that is going to be consistently profitable in the long run. So the hardest part about trading when you start out is figuring out what strategy you are gonna trade with. I tried a ton of different ones. I, jump from strategy to strategy, jump from course to course. I tried them all out, and what I eventually landed on was just taking reversal trades. And so the whole philosophy behind that is that I felt for me that they made a lot more sense. I could visually see when the market was overextended in one direction and when it was more likely to, reverse back in the other direction. And I could capitalize on that. And that also allowed me to get a good risk reward ratio where I'm risking something like, $100 when you're first starting out, $50, or then when you size up, a couple $100, $1,000, and then you get 3 times that. So, you stick to that positive risk reward ratio that's really important for being consistently profitable over time. And in terms of simplicity, I tried all these indicators, patterns, and what I felt good at and confident at was just seeing that, okay, well, where are the, support zones and where are the resistance zones? And, just seeing where those are, and the market is gonna bounce off of those often. And the idea is I just make money on the swings back and forth. And so as a trader, try out a couple of different strategies because you don't know kind of which style is going to work for you. Some people like breakout trades and continuation trades where they see a strong trend and they're able to continuation trade with that. But I always found that a lot of the times that just led to me FOMOing. You know, even up here, maybe it looks like, oh, this looks good to keep going to the upside because we've been in kind of an uptrend. It's kind of gone sideways, now it's going up again. I always found like doing that was a lot easier to get trapped and just lose money and be on the wrong side of the market. But for visually seeing, you know, a lot of the basics and really just the big picture of what I do is just see, okay, well, when has the market just crashed in one direction, either down or skyrocketed up in the other direction on the way up? And when it does that, the market, think of it like a rubber band. The market will get overstretched and it will like to snap back. It wants to be in more of an equilibrium. The market likes to be, you know, in a more methodical uptrend where it has, you know, moves up and pullbacks, moves up and pullbacks. That is a healthy trend where the market's more likely to continue trending. But when it does something like this, that's more parabolic, it's more likely to snap back. And then for me, I just realized combining that kind of movement with having a, you know, a support zone and a resistance zone, it made a lot more likely to be able to profit. And then I was able to, you know, have my stop loss in an area where it made sense, enter in on the trade, and then look for, you know, it to move up the rest of the swing. And in this case, you know, it did that rubber band effect where it snapped back to the other side. You know, this is my risk here. And if you just kind of visually, that looks like I'm getting 3, maybe 4 times my risk on this trade. So I was probably risking more like 200, 250. And this trade was a really nice swing in that direction. And so I was able to close out. And, you know, when it comes to trading, you don't need to go for a massive profit on the other end. All you need to be doing is capturing, you know, that middle part of the swing, and you can consistently make money doing that. Really good traders only really capture 80% at the most. You know, this could be even 40% or 50% of this swing if you count the swing from all the way down here all the way up to the highs here. And that's totally okay. You can be really, really profitable doing that as long as you have that really good risk reward ratio, right? And so what I wanna do is I wanna walk you through 3 different trades over the years of scaling up from a smaller account to a larger account. You're gonna have different steps along the way at different account sizes of how you manage your trades, how you enter in. And so it's gonna be really crucial for you as a growing trader to watch how I trade and enter on each one of these trade setups we're about to go through. Now, don't forget to get that 90-day trader roadmap in the description of this video. It's gonna have a ton of those helpful links that we talked about, but also a ton of step-by-step helpful information that we just haven't gone over in this video that you are really gonna wanna be paying attention to as you go through this process of figuring out your strategy, even if you don't use my strategy, but figuring out your strategy, figuring out how to become consistently profitable with that strategy, and just consistently execute this strategy. That is the hardest part about trading, is getting consistent. So let's start out with the first phase here. What you should be doing when you first start out trading and risking a small amount. In this trade example right here, this is a real trade I've taken on a small account. I'm risking about $100 per trade here, and you can risk a lot less than that. I'm trading 5 contracts here actually, based on this number 5. So you could do 1/5 of that. You could be risking $20 on this trade. So you can start really small. And what you wanna be doing when you first start out is you wanna be just going for quick, easy wins. You wanna keep your management of your trades as simple as possible. Now, first off, I wanna get in a little bit more of how my strategy works and how I actually find these trades. Now you can see initially, I am betting here that the market is going to go down. And so you can make money betting the market's gonna go up, or you can bet money that the market's gonna go down. It's really, really simple. You know, you don't have to do anything complicated. It's called shorting, and it sounds a little complicated, but really at the end of the day, you were just clicking a sell button instead of a buy button, and you're making money as the market goes down, which is actually in your favor in that case. Now, the first step to every trade I take is finding those big picture resistance or support zones. And so for this particular trade, if I go back in the chart and look, is that the market was coming up to this area, and just looking at the big swings, we had touched up here twice already. And so I drew this box. Now I'm not gonna go over these. I'll link a video that dives way more in depth on how to draw support and resistance levels and the 5 key things I look for. But essentially I said, okay, I like this area in the market. You know, resistance and support zones can be pretty subjective. You know, you could be up here, you could be down here. But the idea is if it comes up anywhere in this area, I wanna look for the market to potentially reverse, right? And capture a move down off of that area. And so I draw these levels off of a 15-minute chart. And then I enter in my trades on a 1 or 5-minute chart. What this does is, drawn on a bigger picture time frame, is it just allows you to see the bigger picture. And I always found that the higher levels, that the levels from there are just higher probability because they're on a bigger time frame, versus the smaller levels, there can be a lot more whipsaw back and forth. And so the market right here that we're looking at is coming up into this support level here. It doesn't pop up on this chart here because I think it's slightly out of view, just because it's kind of that big picture. But that's my idea here, is first off, we're coming up into that level. And then the second step is, well, there is this big move up here, and I've drawn an uptrend line. And all I'm looking for is, because when you're counter trend trading, well, you kind of need to make sure that, you know, the trend that you're going against is over, right? And so there's a big move right here, and I'm thinking, okay, I like this to go back, thinking about that rubber band effect we talked about, right? It's likely to come up, and if it gives that back up, it's gonna snap back, and oftentimes it'll snap back to kind of where it started. And so what I'm looking for here is I'm looking for it to do that. And I actually have a buy limit down here that it almost just hit and then is reversed off of a little bit. And so that's all I'm looking for, is just that quick move. And what you wanna do when you first start out, I highly suggest this, is go for a fixed profit target. Now I do it a little more complicated here because I am more advanced, trading on a smaller account. But if we zoom back to the start of this trade, is all you need to do is, when you enter in a trade, is enter in here, and then I like to put my stop loss where I'm gonna get out if the trade goes against me is in a key area, you know, essentially above this swing here. Because I think that, hey, I think this is a rubber band effect. It's likely to snap back. It'll do that quickly if it does. And if it's just in a strong trend where it's just gonna bounce and keep going higher, cut your losses, right? Remember about that risk reward. We wanna just risk that $100, lose the $100 if we're wrong, or if we're right, you know, we collect $200 or $300. Because the worst thing that you can do as a beginning trader, and I see people do this, is they'll take their stop loss that sets at, you know, at $100 of risk, and they'll say, oh, let me move it up here a little bit more, or a little bit more. Give the trade a little bit more wiggle room. And most of the time, the best trades happen and work out quickly in your favor. And the ones that don't, they're just not gonna work out no matter how much room you give them. And so it's better to just cut your losses and move on. And so once I jump in here, that's what I'm looking for, is the market to kind of give that move back up. That's a great target. And so when you enter into a trade, you wanna make sure there's that room to profit. You wanna visually see, okay, this rubber band can give me about 2.5 times my risk in profit if it goes down to that area. Because if it doesn't have that, it's not worth the risk. There's no good opportunity there. That's your edge in the market, is making sure that there's opportunity for you to put that limit order in an area that makes sense. And so you can see, just kind of looking at the movement of the market, it's kind of in an uptrend right here. And so I was keeping track of, well, there's this uptrend here. Keep in mind, we could come down here and the bigger overall trend takes control and we push up from there. And so that's a little more advanced market reading there. But the idea is, you know, we have this small move that I'm looking for the market to give up. And then that big picture level, you know, hopefully comes and stacks onto this and pushes it down even more. And so the last thing to jump in on these trades is, I like to see a candlestick pattern. I like to see some kind of head and shoulders pattern, you know, a pattern where there's a big bearish bar here, you know, a 3-line strike pattern essentially. Or you can see here as well, this candlestick. The market essentially, if you look at what these do and if you kind of read into what they're saying, the market kind of came up here in this uptrend and then it sold off, and then it made one more attempt to go higher. That's what this candle is showing. It attempts to go higher and then it comes back down. And so what that shows me is there is essentially a micro double top here. And in that trend, in terms of giving back this rubber band effect, that's a really good signal to jump in short here and bet the market's gonna go down. And so from there, just set your limit order and just leave it. Now, I do suggest when it gets close like this is you can move your stop loss at least to break even, but generally it's better to just try and just focus on your entries. What you want to do when you're first starting out trading is master the entries of getting it in. Managing your trades will get you a little bit more money, let's say increase your profits by 10%, but your entries are going to be 90% of what makes or breaks your trading. And so learning to just focus on those and not think about the management as much, because that just adds, again, more variables, and the more simpler you can make trading, the better. And so just to walk you through kind of what I did here is all I did was, it almost hit my profit target there. And I thought, hey, I see it in this downtrend here, and I'll just move my stop down and see if I can get a little bit more in the trade. And we'll talk about some more complex management steps in the next phase here, so you can know kind of what to do when you get a little more comfortable reading the charts. And so my trade pretty much got knocked out here, and I think about 180 or something, so about 2 times my risk, which was still pretty much what my target was at. And so that's, again, a great trade, and you just move on to the next one. And so let's jump in right into phase 2 and our second trade, where I'm actually risking, I think, $200 to $300 of risk here. And then this is what you want to do once you become a little more comfortable with trading. And you can see that this is a very, very similar setup in terms of just the market moves up, it comes into a resistance level that I'm looking for, and I'm just looking for that rubber band effect to move the market back down. And I found that this is just really, really repetitive and consistent. That's how you make money trading, is not learning 10 different strategies or 10 different patterns to make money off of. It's taking one strategy, keeping it simple, and scaling up. You can trade $100 with this pattern and easily scale to $1,000. It's just a number at the end of the day. It's gonna get a little more stressful at $1,000, but that's why you slowly build up to it so you can get used to that amount of money. When I first started out trading, risking $50 felt crazy and super intense. And now, at a blink of an eye, I feel like I can put $500 worth of risk on a trade. You just get used to it. And so to walk you through this trade entry and then how the management style can change over time is, first off, is again, always looking for that larger resistance level, just off of those swings, off of a larger time frame. I use a 15-minute. I have some students who use like an hour time frame to do that. And then it's just seeing, okay, we have a good trend here, but it started to kind of get overextended right here. You can see with these 3, 5, 10 candlesticks that kind of started to skyrocket here, and then it started to slow down. And so for me, I see that as, okay, well, I see kind of an uptrend here. It's kind of getting methodical, but it kind of got overextended, and it's near that area where I'm already expecting it to reverse. And so having that as a combination, it stacks on top of each other and increases the likelihood for it to happen. And then from there, it's just looking for that kind of a candlestick pattern to show it's starting to reverse. And for me, that was, well, we had a really big sell-off right here. These 4 red candlesticks shows a lot of selling. And if you look at, we hadn't really had that much kind of selling pressure, 4 candles in a row for quite a while. And once it's kind of moved up here, especially after this, I think that's a good combination with it coming here and making 2 lower highs. And that's the whole thing, is just reading the basics of, okay, well, uptrend is made out of higher highs and higher lows. And when it's gonna shift, well, it's gonna start making lower lows and lower highs. And so here it makes a higher low and then a lower low. And then here it's making 2 lower highs from this peak that it made. And so from there, I elect to jump in short on this bearish candlestick right here, because the market, if you kind of read into these 2 candlesticks, it shoots up and then it shoots lower, kind of confirming that lower high. And so for me, that's a good enough confirmation with, the support level, the uptrend broken, and then those lower highs coming into play. And then of course, looking at the bigger picture of this kind of rubber band move up, likely to push lower. And then from there, I just jump in. And to kind of show you, once it kind of moves lower, now I've started to move into more of a fluid management style. The stop here is above this high right here because I think that, hey, this is a swing low. I'm assuming that we're gonna start moving lower off of that. And if it breaks this instead, you know, and comes up here and makes a higher high, well, you know, this uptrend's gonna keep going and I just wanna cut my losses, right? And so from there, it starts to go in my favor. And I'm looking at more, okay, I'm not looking for 2 times fixed profit target anymore. I'm looking for 3 fluidly. And what I mean by that is I have a profit target all the way down here at about 3 times my risk. And as it starts to move in my favor, I'm gonna move my stop loss further down. And if it really gets going, I'm gonna move this further down as well. And I'm just gonna slowly move my stop loss down and my profit target down. But I'm also gonna manage with how I see the market moving. And in this case, the market starts making a really tight downtrend right here. And often I've observed when I see the market coming up here in a clean, methodical way and then making a really tight downtrend, I wanna capture this move here. But as soon as it starts to, you know, become a broader downtrend, I don't wanna hold through those pullbacks and swings that the market could have, because at this point, well, it could actually bottom and start an uptrend right here. And so what I decided to do was essentially manage with this downtrend line. And so that's something new that I started doing as I became more comfortable with understanding the market and being in a trade, is I would be okay to, as soon as there was a candlestick close or 2 outside of this trend line, or with idea of saying, hey, if it breaks above this candlestick, it's probably breaking above and out of this trend line, I'm gonna close out and get out of the trade. And so there, I closed out for a good profit, captured this, you know, move down. And I think from there, you know, looking at this, it looks like we could have a retracement up. Now it could come up here and keep going lower. But again, I've captured the easy money and the part that is just good enough for me at that point. You know, I don't want to deal with the choppiness of the market and the fact that it could just give all those profits back up. I, you know, am reading the movement of the market. Now, of course, sometimes it can just have a little pullback and puke lower, and that's a part of managing your trades. So now let's go into another trade where I'm actually risking $600 per trade. And let me walk you through the intricacies of how to scale in and scale out of a trade. This is definitely a lot more complicated, and so I highly suggest don't do this when you first start out, but it shows you the power of how to do it. This is actually a long example of a trade. We're in that big picture support zone. We've actually kind of broken out of it. That's okay. I like to call those a failed breakout. It's just attempting to fail and break out the other side. But, you know, I have this downtrend line in place, and then you can see there's kind of some big moves up here that shows strength to me. And then we have one more push lower. I see this as a final attempt to go lower. And then right here, boom, we have a double bottom. This is a nice bullish bar. I think at this point, it's essentially confirming a double bottom here. And I think it's worth jumping in a trade long here, putting my stop loss below here and getting long. And so the first thing though with that is I didn't feel super confident right away, just because it felt like there was a lot of downwards pressure right here. And so I, you know, elected to, well, give it a couple candlesticks here. See, okay, if it's gonna make one more push lower here, boom, I definitely wanna get in. If that candlestick reverses, I think that's showing a lot of strength. So I jump in there, but I'm actually not full size here. I'm 2/3 size. Full size here for $600 on this particular trade is 3 contracts. And so what made me more confident was waiting for this candlestick to close out really bullish. That I thought was a strong signal, a strong bullish bar. It had, you know, made this kind of little couple dojis here, and then it had made this strong candlestick. So I put in an order, a stop market order above that, essentially getting in long at the break of this candlestick, and then I matched it down with my stops down here. So essentially that made my total risk to be $600. That's kind of my full size at the time. And so one thing, what you can do is you don't have to necessarily scale in. You can also just trade smaller size. You know, let's say full risk is, you know, $600, and that's, you know, 3 out of 3. But you can also just trade 1/3 size and that's it. You know, you could just risk $200 on a trade because, you know, you're not as confident in it. The level's not as strong. There's not as much of a, you know, flush like this, right? And so that's what you can do is when you're not as confident in spots, or if you're just not feeling on top of your game, you can trade smaller size as well because of that. And so that is two ways to kind of change how you enter into trades, because that's going to allow you to control and manage your risk. And really good trading is when you control and manage your risk. When, if you're not confident, but you still think it's worth putting a trade on, you do smaller size. And when you are confident, that's when you put on larger size, because when it comes to trading, no two trades are the same. You know, all these patterns are very similar, but they're not the same at the end of the day. You know, the market's always different. And so over time, and by the time you get to here, you're gonna build that intuition into knowing kind of when you want to put full size on and when you want to put smaller size on. And so once this kind of broke out to be 2 times my risk here, I moved to break even because, you know, there's no reason to let it come all the way back here and turn into a loss, right? And so what I'm looking for at this point is I'm just kind of giving it a mental stop at this point. If the market pulls back all the way here and just flushes and knocks me out, it'll do that and knock me out at break even. That's always what goes on in my mind usually when I'm doing this. But it's so unlikely that it happens. Usually, most likely what will happen is it pulls back, you know, and makes a couple candlesticks before, you know, deciding which way to go. And then you can move your stop loss above that. And so that's kind of what I did here, just to kind of skip forward to kind of show you that. Is it, you know, it doesn't look good. It's like, okay, well, maybe it's just going to give this back up. But you can see it starts to find a bottom here, and I then move my stop loss up. And we start to get some volatility here. There's a little bit of news that came out. And so that's why I don't like to do a profit target in some points, because, well, it allows you to have these massive moves where, you know, I think $1,800 was 3 times my risk, and this kind of move, well, I'm thinking, okay, well, we've come back all the way up to here on the left side here. You can see that we've kind of given back this rubber band move, but it allows you to have the potential to get massive moves. And if you look at other trades on my channel, I get some massive moves sometimes. And so to just walk you through quickly is I actually then started to scale out of this trade. And so what I did was the market had this big candlestick up, it had a pullback, and my observation with these is, hey, if it's gonna hold this, it's gonna hold it. And so I would rather scale out of 2/3 my trade there and, you know, capture those quick profits. But then also, you know, I have this uptrend here I'm watching. And so that's why I left one of these contracts on. Hey, you know, maybe it has a little bit of a snap here, knocks me out, and then it takes off and holds this uptrend. And so that's what I'm kind of looking for here. And it looks pretty good right here, especially since it barely knocked out my 2 other contracts, which it's a part of trading. It's gonna be frustrating. You're gonna have trades where you just barely get knocked out and then it goes thousands of dollars of profit in your way, and it just is what it is. You don't want to focus on those small times where, okay, well, maybe I should adjust my strategy to fit that little bit. You want to be, again, focused on the big picture of, okay, well, what generally works and makes me the most money. You can't control the infinite possibilities that the market has and that it's going to throw at you. And so now at this point, it's not looking that great, since it's pretty much just made this double top right here. And so at that point, I'm gonna move my stop loss essentially with the idea that, hey, it's breaking this uptrend, and, you know, I'm gonna get out. You know, I still wanna capture the profits that this move looks like it's gonna do. And so, you know, it has that double bottom here, and I just move my stop loss up to there, and it knocks me out. And so make sure you get that 90-day roadmap in the description below. It's gonna massively help you follow the correct process to become a consistently profitable trader. And also make sure to watch this video right here. It's gonna go through the 5 key concepts in drawing those support and resistance levels that I use every time. Honestly, if I didn't have these key concepts to use in the beginning, I wouldn't have found levels that would easily reverse the market consistently.